All right, guys and gals, welcome back. Welcome back. Boy, what a fantastic day today, right? One of those days you love being a trader, right? Boy, it sounds like a lot of you guys and gals made some pretty good money today, so well done on that. Now, let's get back and refocus here right now because we got one more day left. Tomorrow's a summertime Friday, so not your average Friday. We'll talk about that tonight, don't you worry. And of course, we got some big inflation data coming tomorrow. And man, oh man, we got some beautiful ranges on the charts right now. Now, ranges, my favorite type of market. They give us three types of trades to look for tomorrow. There's failure trades, there's trap trades, and of course there are breakout trades. We'll talk about all three of those trades in the video tonight. By the time we're done this video lesson, everybody will have an easy roadmap to make some money to finish up what's been a fantastic week so far. Now, before we jump in, it's my favorite trades for PCE Inflation Friday coming tomorrow. Make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will you? And give me a heck yeah, give me a hell yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro though, Joe. Let's go make some more money on finally Friday, but should be a pretty busy day tomorrow in our trade room. So charts are all ready to go. As you can see, Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two very important clues on these charts right now that are telling us pretty much where the winning trades are expected for tomorrow. One of those big clues is right here on the 60-minute time frame. We are bearish overall right now on the S&P and SPY, bearish overall here on the Nasdaq and the triple Qs. You know, I like to use these hourly time frames, these bigger picture charts, to give us kind of the overall directional bias for the following day. It's great for that stuff. But you know what these higher time frames don't do? They don't help us time the entries. Well, luckily, I got some tick charts, some faster time frames. I have one really, really important clue on the faster time frames, the tick charts. We're going to cover that in a second because that will help us time the best entries for tomorrow. Now, before we dive into that though, let's check our schedule because there are three things on my radar tomorrow that you might want to have on yours as well. First things first, of course, tomorrow, we got that big personal income number at 8:30 Eastern Time. You could argue this is one of the biggest news reports of the year so far because you have to think, remember, this is the Fed's, this is their favorite inflation number is that PCE, the personal income number tomorrow. I wonder if this will give the Fed a reason to maybe a surprise rate cut next week. I'm just tossing that out there, pure speculation right now, but that will definitely be something I am watching tomorrow and the biggest news of the week that I can see so far. Consumer sentiment tomorrow, 10 o'clock Eastern Time. I know it's on a Red Star news event, but I'll tell you, that number oftentimes has some punch to it. So I'm going to keep that on my radar tomorrow. That is the second thing I'm watching tomorrow. And of course, tomorrow is a summertime Friday. Now listen, folks, Fridays are not like any other day of the week. My mindset on a Friday morning is to get in early when I'm at my best and liquidity is good, right? Us traders, we get a bit lazy with our discipline towards the end of the day on Friday, so be aware of that. Tomorrow morning, my goal is get in early as I can after that PCE number comes out at 8:30 Eastern Time. Get in early when the getting's good, right? When I'm at my best and the markets are liquid. Take profit quickly. Make sure you get into the green, right? Get some profit locked up tomorrow. Remove risk quickly, right? But most importantly, go back and look at the last couple Fridays. Fridays, they get illiquid in the afternoons, and they love to run. So I'll tell you, you catch a big run on Friday afternoon, you can make your whole entire week, your whole month. So Friday mindset, early in, not so much early out, but quick profit, remove risk quick, leave a runner. And again, tomorrow, grab your popcorn tomorrow morning, that 8:30 PCE number. I'll tell you, that might be a big wild card for maybe a surprise rate cut. We'll see. Again, pure speculation right now for next week's FOMC here. Now back to our charts though, because it's good to know when the news is, but we all know by now the money is made on the charts here. I mentioned earlier that these hourly time frames, they're pretty good for overall big picture, but they're not going to help us time the best entries, right? Let's drill down to some tick charts right now. Tick charts, well, see, I trade patterns, right? I use entry patterns for trading, so tick charts make pattern recognition a whole lot easier. This is a 7,000 tick chart, upper left-hand corner, all the time frames, and that indicator right there, pretty much the only indicator I use every day is the 21 EMA. There's one really, really big clue here on this tick chart right now, and that is this trading range right in front of us. This is a bear market into a trading range. Now remember, ranges love love to rotate, right? The amount below the range, the amount above the range, the amount above the range, and the amount below the range. This range rotation back and forth. So in my trade room, I call these slingshot breakouts or slingshot reversals. So as we rotate off the high of this, there's a very good chance these bears are going to try to punch their ticket right down around that 5,400 or so, and possibly even further with a breakout going lower. So knowing that range rotation, knowing this kind of rotation off the high here right now, there are some failure trades, some trap trades, and some breakout trades. You know, for example, I would love to pop this thing up here. I have that channel coming down off the highs like that, where I've marked up this amount, that amount right there. So I like this area up top here. I would love to go up here and look for one of those failure trades. Now, failure trades are kind of my bread and butter trade whenever it comes to a range-bound market, right? So imagine now we pop up, and of course, I'll cover going lower here in a second, don't you worry, right? Because we may keep sliding here into the news tomorrow morning. But if we do pop up here, you know, somewhere up in this area, right? I don't know exactly where it'll go. We get some big news coming tomorrow. What I'd love to do is as this thing pops up, you know me, right? I'm not going to pick tops and bottoms. I'm not going to blindly sell that top because this could keep going higher here, right? But if we do pop up higher here, we know this market wants to rotate back down here. I would love to try to use a failure pattern. Let the buyers try once. Let the buyers try twice. Now, why twice? Because then now we got you, right? Now we know where your stops are. And we can basically use those stops to fuel that reversal or that slingshot move right back down again and fuel that down to take out that pendulum swing. Now watch closely here, because like we saw this afternoon, when markets rotate down like this, they love to pull back and go just a little bit above a prior swing. Now, these are called trap patterns, right? Trap patterns. This, of course, would be a bull trap pattern. Now, notice how I draw this. It's a lower low in price, and it moves just above, right above that high. So again, we go up, buyers try a couple times, they fail, and as they fail, remember, look for those trap patterns as we keep rolling higher. Failure pattern, trap pattern. We teach all this stuff, by the way, in our free video classes. So that is one of my favorite trades here for tomorrow. Pop it up, trap those buyers in, that failure, and then as it's rolling down, look for those bull trap patterns. And again, it's a lower low right there. Very important, lower low, and move just above that high. Now, here's a variation of this that, because we got some big news tomorrow, you want to keep on the radar. So let's say, for example, we run up higher pretty strong here, right, in the news tomorrow. Oftentimes what happens is we'll get that failure off the high. It'll drop back down. It'll give us a 1-to-1 first target. It'll be a winning trade, but because that move higher is so strong, anytime we see a strong move like that, the buyers will come in and try to retest the high. We're an overall bear market, right? So if we pop back up again, I love to short these in a bear market like this. A double top is a gift from the trading gods. Trust me on that one, right? So as we go higher here, it's the same thing, right? Trap those buyers in. Again, a failure pattern. Trap those bulls in. And as we roll back down again, look for that. You got it, right? That lower low in price. It's called a bull trap pattern, right? That trap above that high. This one is a double top. It's basically the same idea. Trap the bulls in, a technical bull trap going lower here. And one last variation of this, and again, we're going to cover this going lower because that breakout going lower could be a very easy way to make money tomorrow as well. But before we do that though, if we were to run up here, there may be so many bears up here, we may not get that 1, 2, and that move back down again. You know, sometimes, again, especially in these bear markets like this, we might get above this high. We might go back and double top that high with that PCE number tomorrow. Watch for if it just gets whacked back down again. Look over here. So what I do, I find channels like this, and I draw off the lows up around that high. See what happens here? You can find those little channels and then give that short a try right there. So think about this. If it runs up and gets whacked back down again and begins to grind down, or sometimes it'll go like this, right? Up like that, rips back lower. What I'll do is I'll grab that new channel by connecting to the lows, up around the high there, look left, right, and find that. Again, it's a trap pattern off the high of this. Now, in all reality, most of the time, these will pop up, V-top, and begin to grind down, right? Kind of the most common variation. I'm going to mark a trend line off that low, up around that high. And as we always say in our trade room, right? First test is the best test. Now, you know me, I love traps, right? I love traps. They are kind of the most consistent, like that one right there, to make money with. But this could be a bull trap like this. It could be a buyer failure pattern, a pullback combination, any of the entry patterns you guys are learning in the free video course, which, reminds me, I keep talking about these entry patterns. I know that most of you guys know these patterns already. You're making money with traps and failures. But if you're watching for the first time right now, this might be way over your head. This is a bit more advanced stuff, but I'll tell you right now, once you learn it, it unlocks a ton of winning trades. So if you're watching for the first time right now, if you want to learn more about the entire strategy, I have hundreds of examples of this stuff in my free video classes. I'll put a link up top here for you. I got you. I'll hook you up. Upper right-hand corner, grab that link that popped up right there, and take that free trading course, because that short video series, the strategy I teach in that video series, will teach you a stupidly simple trick. You'll be surprised how simple this is. That gives a tip off to us. So we always know where the best winning trades are every day in our trade room. Most importantly, I want to help you start timing all the best entries. I'll teach you 4 my favorite entry patterns. You'll learn failures, traps, and a whole lot more. Guys, if you're not making consistent money right now, if you're missing the best trades, if you need a simple roadmap that makes it easy to know where the winners are, where to avoid the losses, hit the link up top there. That free course is perfect for anyone who is serious about making money in these amazing markets right now. So hit the link up top there. Take that free course to learn more. And also, too, don't forget, too, I'm going to put all the important links tonight in the description of the YouTube video. Put the free class links down there for sure. Start there. Also, too, we trade together every day in our trade room, 8 o'clock Eastern time. I'll put trade room membership links down there for you. And don't forget, I post a lot of updates, videos, charts, mindset stuff on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. Again, all the details you'll need to learn more in the description of the YouTube video. But again, take that free video course linked up there, upper right-hand corner, because that will give you more details on how we find the entries. Because, this 7,000 tick chart, we'll use a faster time frame for the entries tomorrow morning in our trade room. So grab the link up top there. Now, let's talk about now if we end up rolling lower here. Because again, this may end up, we may go up and then roll over. We may keep on grinding down, right? I have no crystal ball. All I know is based on what happens next, I know where the best entries are going to be for us. So we measure the amount above, we measure the amount below, we know where the market wants to go. Now, if we start really rolling lower here and we start seeing the market separate off the moving average, this is one easy way to know, well, what do we always say? We say separation equals strength. Look back over here. See how the market separates off that moving average, right? When it separates, see over here, right? Over here, it's stuck in the moving average, not strength. Over here, separates off the moving average, that's strength. Why is it important? Because if we go lower and we start seeing separation, what I mean by that is the pullbacks are no longer pulling back above that moving average. If we start seeing separation off this is where you can go in with bull trap patterns. Now, ideally, I want these bull trap entries, I want these before we take out that big pendulum swing, right? Ideally, right? But if we see enough strength, if there's enough strength going lower, you'll see a lot of bears up there shorting they will short the heck out of those bull traps. Just like over here, right? Separates off it. Look for that little higher high right there, right? And hit that bull trap off the high there. So as we go lower, if we begin accelerating going lower and we start seeing that separation, remember, separation means strength, right? If it's stuck in the moving average, not the right time for that trade. Now, one very important thing here is that if we end up rolling lower now this whole area basically, right? This whole area now becomes one big breakout pullback zone, specifically that area right in there. So now let's imagine, right? We go up, we roll lower, or we keep on rolling lower here. At this point, what was support now becomes resistance. Now, breakout pullbacks are very, very simple. Whenever you think about a breakout pullback, you want to think about a two-legged pullback. Now, what's a two-legged pullback? A two-legged pullback is a measured move that goes a bit too far. So as we pull back above the moving average, one leg, two leg. In the video course, we call these measured moves, right? They're A, B, C, D, right? So one leg, two leg. And again, the goal here is to get that second leg, remember, a bit more than a measured move, right? It'll go a bit more than that symmetrical A, B, C, D, right? So it goes past the 100%. You're in the right area there. Ideally, let's line that up somewhere with this area right in here. Now, if I can get that two-legged pullback coming in, remember, this could easily rip going high. I don't have a crystal ball. I'm not going to blindly sell that area. Please stop blindly buying and selling off levels. It's not consistent long enough over a long period of time. What I do is that same failure into trap combination, right? Because again, it may keep on grinding up. What I know though is with all of that momentum going lower, the bears are going to want to retest that low again. So if it wants to keep grinding higher, wonderful. But once it starts pulling back, buyers come in once, buyers come in twice. Now we got you, right? Now you're trapped in long. Now I know where your stops are. If you're stuck long and you get stopped out, how do you get out? You got to sell your way out, right? That's the only way out, right? Is to sell your way out of that thing. So buyers become sellers as they get stopped out. There's your failure pattern. And again, watch for that separation. If that little shallow pullback separates off that moving average, bingo, that is your signal now. That will get sold. That will get sold. These are almost guaranteed winners. Again, look over here when it rolls over and separates off that moving average. Again, it's a failure into trap combination. It could be a failure into pullback combination. These are my favorite though. Let me teach in the free video course. Now, at this point now, I want you to think about this, okay? Because this is very important. The size of the breakout leg, okay, the size of the breakout leg is a measuring leg. So we're going to take that move up top here, pin that down, and that's going to give us a measured move. Measured moves are the name of the game when you get breakouts of trading ranges. Now, why is that important? Well, I'll tell you why. Because if we get that two-legged pullback, popping up, trap those bulls in and back around that low now, once we complete that measured move, everybody who's sold up here are going to take profit down here. My way of looking at it is sellers up here become buyers down here. Now, we are way, way down after that big bloodbath we saw yesterday morning that continued into today here. This is a horrible place to be a seller. We don't want to sell low. We want to sell high. So who's selling down here? Rookies, right? These are inexperienced traders, small stops, small accounts, right? Okay. So bottom line is once we take out that low, once we complete again, that measured move down here, now let's see, we might get lucky here and we might get the bears coming in trying once, trying twice. Now remember, whenever we go against the overall direction of the 60-minute time frame, this is a half-size position, right? This is not full-size positions, right? You want to allocate capital correctly when you're going with or against that 60-minute directional bias. But this could easily be a failure into, you guessed it, another one of those trap combinations. See, once you learn what works, you just keep on milking that cow, right? Until it stops working. And these are working for a very, very long time. Now, that double bottom, right? Or that measured move, we'll see what we get tomorrow morning, right? That failure into, in this case, a bear trap combination, right? It's a higher high in price. Remember that separation off the moving average. Where does the market want to go? It wants to go right back up and take out that high. Once we get back to that high, what do? You don't buy up here. You trap those bulls in and you run it back down. This oftentimes creates one big trading range. That's the sequence we look for on a breakout. All right, boy, I'm getting excited just talking about this right now. This is why I love doing these videos every night on the YouTube channel. So now we know how to run up, right? How to move, how to trade this as we go lower. Let's go to the Nasdaq now, because the Nasdaq, I hear you, buddy. You're getting anxious over there. I know. Sorry to keep you guys waiting. The Nasdaq here right now. The Nasdaq is very similar, obviously, to the S&P. We're bullish overall. We're definitely not bullish overall. We're bearish overall right now on the 60-minute time frame. That gives our directional bias. Now, a little bit of a different twist here on the NQ. Same basic idea. Bear move down into a trading range. And remember, ranges love to rotate, right? They rotate down, up, down, up. Now, what appears to be happening right now is we have a triangle. And we talk about these expanding triangles or megaphones inside the free video course. But it looks to me like right now, this triangle may be the kind of the name of the game here until we see a breakout tomorrow morning. So same basic idea, right? Same basic idea. Trade that rotation. We've already completed that pendulum swing. See, that's one big difference between the S&P and Nasdaq, right? The S&P still has all of that pendulum swing just begging to get filled down there. Again, think about that slingshot move, that slingshot breakout, right? Running lower there. The Nasdaq doesn't have that, just not yet, right? Not yet. So as we go up, it's that 1-2 failure into trap combination, right? As we go up, it's that double top 1-2, right? The same basic idea we talked about earlier on the S&P. The one kind of key difference between the S&P and Nasdaq is the Nasdaq has this channel coming down. Okay, now remember, rotation's really important. We should be trying to rotate back and forth in this triangle. So ideally, you want to short the top of that triangle, right? That's where you can be most aggressive and most confident. But you know, obviously, again, we're pretty bearish overall right now. So how would I short off the top of that channel? Well, what's the problem? The problem is I'm selling relatively low, right? I'm not selling where the range would tell me to sell. So whenever I'm forced or whenever I see a chance to sell relatively low, what I'll do is I'm going to use a slight variation from that failure. On a failure pattern, we go up 1-2 back down again, right? We go up 1-2 back down again, right? If always a shallow pullback, I have to be suspicious now. They're going to try to run this thing up and then back down. I'm going to be careful shorting the shallow pullback. To avoid that problem, we do is we look for a bull trap, basically. Buyers try once, lower low, buyers try twice, and we sell as high as we can. So again, if we go up into these highs, say, okay, 1-2, typical failure pattern, right? But if we pop up and we start seeing this channel hold, right? We start seeing buyers try once, they go lower, right? Buyers trying twice, and we get that little pop of that, nice strong red candle closing firmly below the moving average. That's a bull trap entry. It's basically a failure pattern with one more layer of protection. That's all that is, right? Because you're anticipating they may run it lower and try to run that and finish it up, right? I want to be in the green on that trade by the time we get a little bit lower there, right? That's why I don't sell low in that situation. That's the only kind of real difference there between the S&P and Nasdaq. Same thing, go up, right? V top, grinding back down again. Find that channel, same idea, right? Same basic stuff we talked about earlier on the S&P. And of course, on the Nasdaq, I put that reminder down here because, in this situation, we don't have the benefit of that pendulum swing. On the S&P, we do. So remember, if we start running lower here right now, right? If this thing starts to separate, right? If we start grinding down, and we start separating off that 21 EMA. Remember, separation means strength. We're probably now looking for some bull traps go off the high. And then remember, this becomes breakout leg into measuring leg, right? Breakout leg into measuring leg. We may end up rolling lower, popping up, underbelly of that range, 1-2, back down again. Remember, breakout leg, measuring leg, right? That will give you that target on the way down there. And just as we talked about earlier on the S&P, right? If we do end up getting that real strong run down, think about that two-legged pullback, right? Two-legged pullback above the moving average, a bit more than a measured move. That will give us the general area of where to look. Ideally, look left, find some of these prior swings, right? Find the underbelly area of the range, as we call it. Don't pick that top up there. Don't pick the top up there. Wait for this thing now. Get up around that moving average, right? Once they pull back, 1-2, there's your failure. There's your bear trap combination, right? Same thing over and over again, right? And back to that little bottom. Once we take our profit off of that low, we then go in, we trap those rookies in with that seller failure pattern, 1-2, right, back up again, and we look for that target back up, and this becomes one big trading range. We oftentimes will go from one range, it'll break down into another range, right? If we start going sideways into a new range after the news comes out, what do? What happened over here? You pop it up, you buyers once, buyers twice, failure, trap combination. We mentioned a lot of this last night on the video as well, right? So if we do it rolling lower and we start chopping around, going sideways there, same basic idea, right? As we saw today, right? Bear market into a trading range, watch that pop up, trap those bulls in, roll it over, grab those bull traps, and trade that rotation back and forth. All right, guys, that is the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, every morning, the good stuff is with us tomorrow morning, the trade room. Come trade it with us. The easiest way to start making money in these wild markets is to learn and trade along every morning in our trade room. I'm going to put all the important links you guys need in the description of the YouTube video, the free class links, the trade room membership information, and of course, Twitter feed will be down there as well. If you're here for the first time, start first on the free video course. Most people are able to use that free video series, start making money on their own, at least start avoiding losses on their own. That will give you the roadmap, and hopefully sometime soon you'll see you trading with us sometime soon in the morning trade room. Right, guys? A fantastic day today. It's been a wild week. We got big day tomorrow. Have some fun tomorrow. Make some money tomorrow, and we'll come back next week and we'll keep this rolling. Next week, FOMC week, big earnings week next week. Final few days of the month of July. It's going to be a busy one next week. So enjoy your summertime weekend. Make some money tomorrow for us, and we'll see you guys next time. Adios, amigos. Bye for now.